Well, howdy there, Internet people. It's Belle again. So today, we're going to talk about an economic indicator you don't need to worry about too much. Okay, so there's been a lot of bad economic news, and we just saw something happening with the S&P 500 that is probably going to get a lot of headlines. And because of its name, it's probably going to cause a lot more anxiety than it really should, at least at this point. An incredibly common market tool is something called a moving average. Two of the most used, especially in this regard, are the 200-day and the 50-day moving average. Those are exactly what they sound like, the average over those periods of time. On Monday, a signal emerged. It led to this question. Quote, "I'm finally starting to see how all of this impacts me, even though I'm definitely not rich and I don't have any money in the market. I started reading some stuff about it, and the S&P 500, which is where the company I work for is listed, did a death cross. How worried should I be?" Okay, so a death cross is when the 50-day average drops below the 200-day average. It often gets read as a sign of deeper downward turn. How worried should you be? I mean, it's called a death cross. It's obviously not good. I've never heard anybody say, "Oh yay, a death cross." However, it's not as scary as the name implies. If you look at the previous death crosses on the S&P 500, most pull out of the downturn within a month or two. There's been about 20 since the 80s. The overwhelming majority resolve themselves pretty quickly, and I think it's something like 80% are back positive within a year. However, and this is a big however, most economic downturns are not directly caused by policy like this one is shaping up to be. This is one of those indicators that I'm not sure you should pay too much attention to, because Trump could pause tariffs for 6 months and send stocks back up tomorrow. There are far more troubling economic indicators, like the consumer confidence numbers, the GDP estimates, and so on. Now, if the stock for the specific company you work for, rather than the S&P 500 as a whole, flashes a death cross, then I don't think anybody would fault you for updating your resume, just as a precaution. But you might not need to send it to anybody. Once this is all charted, a lot of indicators like this might not be incredibly accurate this time around, because Trump is erratic. The indicators are based on how markets normally react. Nothing about this is normal, and there's a lot of uncertainty out there. Rather than looking for these kind of indicators, I'd pay more attention to consumer confidence, the Buffett indicator, oil prices, along with inflation and jobs data. Your worry right now isn't a stock market downturn. It's a wider economic slowdown. With a name like Death Cross, it's obviously going to get headlines, but I think decreasing oil demand forecasts is a far bigger concern. Anyway, it's just a thought. Y'all have a good day.